What a treat we have here. A chance to sit down and soak in the wisdom of investing legends Warren Buffett and Charlie Munger. This is truly a masterclass in the art of building wealth through disciplined business analysis and strategic deployment. Imagine being a fly on the wall, privy to the unscripted conversations and insights shared at those famous Berkshire Hathaway shareholder meetings. It must have been like being a student in the presence of two brilliant, seasoned professors, their wit and wisdom flowing freely, unencumbered by the usual Wall Street jargon. As someone just starting their investing journey, I can't help but feel a sense of excitement and anticipation. To have the opportunity to learn directly from these two titans, to hear their practical advice on evaluating businesses, allocating capital, and making decisions with conviction. It's the kind of opportunity most investors can only dream of. And the fact that this knowledge has been so thoughtfully distilled and curated into a clear, actionable framework, well, that's just the icing on the cake. I can already feel my understanding of the fundamentals of successful investing and business management expanding with each turn of the page. So, let's dive in together, shall we? I'm ready to soak up every bit of Buffett's wit and Munger's wisdom, to apply their insights to my own financial goals and aspirations. This is going to be one heck of a masterclass in building wealth the right way, through disciplined analysis, strategic deployment, and a clear-eyed understanding of human nature. Buckle up. This is going to be an unforgettable ride. 1. The investment mindset. The investment mindset, the very foundation upon which fortunes are built. When the legendary Warren Buffett speaks on this topic, it's as if the heavens part and a shaft of golden wisdom descends upon us mere mortals. Let me paint you a picture, dear reader. Imagine sitting in that hallowed hall, the Berkshire Hathaway annual meeting, and listening with rapt attention as the Oracle of Omaha shares his secrets. No complex financial models or market forecasts, just a simple yet profound question. Could a competitor with $100 million really challenge See's Candy's position in California? The answer, of course, was a resounding no, and therein lay the key to See's enduring success and the millions in profits it has generated for Berkshire. You see, the cornerstone of Buffett's approach is the concept of the circle of competence, knowing what you know, and just as importantly, what you don't. It's like a seasoned baseball player, carefully selecting which pitches to swing at, rather than trying to hit every single one. By focusing only on the opportunities that fall squarely within your area of expertise, you can act with unwavering conviction. And speaking of conviction, Buffett's philosophy on the time horizon is truly revolutionary. Rather than getting caught up in the market's fickle daily whims and emotions, he looks to the long term, where the market behaves not like a voting machine, but a weighing machine, accurately measuring the true value of a business. Just look at Coca-Cola. Those who trusted Buffett's vision and held on saw their investment multiply more than 20 times over. But perhaps the most profound shift in mindset that Buffett espouses is thinking like a business owner, not a stock trader. When you buy shares, you're not just acquiring a ticker symbol. You're becoming a partial owner of a real, living, breathing enterprise. This perspective naturally leads you to seek out quality companies with predictable economics, rather than chasing the latest speculative fad. If only we could all bottle up Buffett's wisdom and take a sip whenever the markets start to feel tumultuous. But alas, the next best thing is to immerse ourselves in the stories and insights that have stood the test of time. So let us carry on, dear reader, and learn the secrets of building lasting wealth through disciplined business analysis and strategic deployment. The road ahead may be long, but with Buffett and Munger as our guides, the journey shall be truly extraordinary. 2. How to approach valuation. The art of valuation, the very foundation upon which fortunes are built. When the dynamic duo of Buffett and Munger take the stage at the Berkshire Hathaway annual meetings, the room crackles with anticipation, for these titans of industry are about to share their secrets on how to separate the wheat from the chaff. You see, dear reader, their approach to valuation is refreshingly simple. No need for complex mathematical models or financial wizardry. If you need a calculator to determine value, they proclaim, you're overcomplicating things. It's all about those good old-fashioned principles, estimating future cash flows and having the patience to wait for the right price. Take their acquisition of See's Candies back in 1972, for instance. Traditional metrics may not have told the full story, but Buffett and Munger could see the predictable cash flows, and the company's enduring competitive advantages. A bird in the hand is worth two in the bush, as Aesop so wisely put it, but Buffett and Munger took it a step further, factoring in the all-important variables of timing and interest rates. And it's not just the numbers that captivate these legends. They also place a heavy emphasis on assessing a company's competitive moat and the quality of its management. After all, as they sagely note, a wonderful business at a fair price creates more value than a fair business at a wonderful price. It's a perspective that has served them well time and time again, allowing them to pounce on opportunities that others may have overlooked. But the real genius lies in their adherence to the margin of safety principle. They don't just look for a slight discount. No, they demand a substantial gap between price and value before they're willing to pull the trigger. It's like crossing a bridge. You wouldn't want to be carrying a 9,800-pound load on a 10,000-pound rated structure, would you? Better to have a comfortable buffer, just in case. And this disciplined approach has paid dividends, both figuratively and literally, during market downturns. While others froze in fear, Berkshire's clear valuation framework allowed them to act with conviction, scooping up stakes in strong companies at steep discounts. So, my fellow investors, heed the words of these sages. Valuation is not about being precisely wrong, but about being approximately right. Ditch the spreadsheets and focus on the fundamentals, the pricing power, the customer loyalty, the consistent demand. Get the what right, and the how much will become crystal clear. For as Munger so eloquently puts it, it's not supposed to be easy. Anyone who finds it easy is stupid. Embrace the challenge, my friends, and let the wisdom of Buffett and Munger be your guide. The path to true wealth may not be paved with ease, but with their timeless insights in your arsenal, the journey shall be one of unparalleled fulfillment and prosperity. 3. All things capital deployment. The art of capital deployment, the very lifeblood that transforms a simple textile manufacturer into a global behemoth like Berkshire Hathaway. When it comes to putting their hard-earned dollars to work, Warren Buffett and Charlie Munger have perfected a three-part approach that is nothing short of masterful. First, they always start with the concept of opportunity cost, that fundamental question of, is this better than every other possible use of our capital? It's a level of discipline that would make even the most seasoned investor blush. Why settle for good when you can seek out the absolute best? Just look at how they pounced on opportunities to invest in Goldman Sachs and General Electric during the 2008 crisis, not because they were merely attractive, but because they handily outshone every other option available at the time. Next, Buffett and Munger bring that same level of rigor to stock buybacks, an area where so many companies tend to lose their way. Most firms repurchase shares willy-nilly without a care for price, but not Berkshire. Oh no, they've drawn a clear line in the sand. They'll only buy back stock when it's trading below 120% of book value, ensuring that every dollar spent creates more than $1 of value for their loyal shareholders. It's a simple rule, but one that eludes so many, who seem to forget the most basic tenet of value creation. And then there's their approach to acquisitions, a masterclass in capital preservation. Unlike those corporate buyers chasing growth or cost savings, Berkshire focuses on scooping up great businesses they can hold on to forever. Just look at See's Candies. They didn't storm in with sweeping changes or harsh cost-cutting measures. No, they kept the existing management team in place and let them work their magic. It's a light-touch style that makes Berkshire the go-to choice for family businesses looking to sell, opening up opportunities that others can only dream of. But the true genius lies in how they apply this strategy over the long haul. Take National Indemnity, the insurance company they acquired way back in 1967. When the market conditions turned tough, most would have chased revenue by writing risky, money-losing policies. Not Berkshire. They had the patience to cut their business by a staggering 80%, waiting patiently for the perfect pitch. And when the conditions improved, they were able to capitalize aggressively, reaping the rewards of their prudence. But even the most bulletproof capital allocation strategy is only as effective as the people executing it. That's why Buffett and Munger place such a premium on finding and empowering the right leaders, skilled, motivated managers who think and act like owners. It's a critical piece of the puzzle, one that has undoubtedly contributed to Berkshire's enduring success. So, my fellow investors, heed the wisdom of these titans. Opportunity cost, clear investment criteria, and capital preservation. These are the guiding principles that have transformed a humble textile maker into a global powerhouse. Embrace the discipline, trust the process, and let Buffett and Munger be your steadfast companions on the road to true, sustainable wealth. 4. Power to the people. The true power behind Berkshire Hathaway's remarkable success, it lies not just in their capital allocation prowess, but in their mastery of the human element. You see, dear reader, Buffett and Munger have long understood that the best-laid plans are only as strong as the people tasked with executing them. That's why they've spent decades honing their vision for selecting, motivating, and retaining truly exceptional leaders, often in ways that fly in the face of conventional corporate wisdom. For them, good leadership isn't about fancy degrees or impressive resumes. It's about something far more fundamental: character. Buffett's litmus test is simple yet profound: intelligence, drive, and above all, integrity. Without integrity, he sagely notes, the first two can become dangerous. Look no further than the Salomon Brothers crisis of the 1980s, where a single rogue trader's breach of trust nearly brought the entire enterprise crashing down. That harrowing experience only reinforced Buffett's belief that integrity is an absolute non-negotiable. And this focus on long-term trust extends to how Berkshire approaches compensation as well. Gone are the convoluted bonus formulas and stock option schemes that plague so many public companies. Instead, they favor straightforward, performance-based pay plans tailored to each individual business. Incentives that truly drive lasting value creation, not just short-term gains. But perhaps the most striking aspect of Berkshire's management philosophy is their decidedly decentralized approach. Picture this: a mere 24 souls at headquarters overseeing a workforce of 400,000. Buffett calls it delegation bordering on abdication, and it's this light-touch style that attracts the most independent-minded, autonomous-spirited managers, the kind who thrive on the freedom to run their businesses exactly as they see fit, without meddlesome committees or consultants in sight. And when problems do arise, Berkshire's response is equally measured and clear-headed. Rather than resorting to thick rulebooks and heavy-handed tactics, they simply ask their managers to consider how their actions would play out in the next day's headlines. It's a beautifully simple guiding principle that trumps any corporate playbook, backed by the deep pockets and unwavering support of the Berkshire juggernaut. But the true testament to Buffett and Munger's management genius lies in their approach to succession planning. Instead of searching for another Warren Buffett, they've built a culture designed to outlast any single leader. Managers join Berkshire knowing that their life's work won't be dismantled by the next big restructuring or consulting fad. This promise of permanence creates a virtuous cycle, attracting the very best and brightest who are eager to preserve and grow their businesses for the long haul. The power of understanding people and organizations. It's the secret sauce that has transformed Berkshire Hathaway into the marvel it is today. So, let us learn from these masters of the human element and strive to build enterprises where integrity, autonomy, and a steadfast commitment to the long-term reign supreme. For in such fertile soil, the seeds of true sustainable success shall surely flourish. 5. The insurance engine. The engine that propels the mighty Berkshire Hathaway juggernaut, its unparalleled insurance businesses. It all began with a modest $8.6 million purchase of National Indemnity back in 1967. And from those humble roots, Buffett and his team have built the world's leading insurance operation, now boasting a staggering $165 billion in float. But this is no ordinary insurance empire, dear reader. Berkshire's secret sauce lies in how they wield this vast pool of investable capital, not as a typical insurer would, but rather like a bank with a single, steadfast depositor who has promised never to withdraw a single penny. Add to that the steady cash flow from their non-insurance businesses, and you have a recipe for true, sustainable competitive advantage. Picture this. When the mighty AIG needed to offload $10 billion in long-term insurance obligations, or when Lloyd's of London required market support, who could they turn to but the indomitable Berkshire Hathaway? As the safest port in any storm, Buffett's empire has become the go-to destination for the industry's most complex and high-stakes deals. But this success isn't just about financial might. It's built on unwavering discipline, honed over decades of experience. Take National Indemnity, for instance. When the insurance market took a turn for the worse, they didn't succumb to the temptation of chasing revenue by writing risky policies. No, they made the bold and unconventional move of slashing their premium volume from $366 million to a mere $55 million, absorbing the higher costs rather than pressuring their employees into bad underwriting decisions. And then there's the arrival of the legendary Ajit Jain in the mid-1980s, whose disciplined approach to risk-taking, combined with Berkshire's formidable capital strength, opened up a whole new world of opportunity. Stepping into Buffett's office one Saturday morning with no prior insurance experience, Jain went on to build what has become the most innovative and profitable reinsurance operation on the planet. Even when faced with setbacks, like the acquisition of Gen Re, Berkshire's unique structure allows for patient correction rather than knee-jerk reactions. Instead of rushing to fix the problem, they took the time to meticulously identify and address the underlying cultural issues in underwriting and reserving, transforming Gen Re back into the premier reinsurer it was always meant to be. The magic that happens when you pair permanent capital, unwavering underwriting standards, and true industry brilliance. With 4 times more capital per dollar of premiums than their competitors, and the ability to take risks that others can only dream of, Berkshire's insurance arm stands as a true testament to the power of their unflinching, long-term approach. So, let us marvel at this extraordinary engine of wealth creation, my fellow investors. For in its steady hum, we can hear the echoes of Buffett and Munger's timeless wisdom, reminding us that true, sustainable success is built not on financial engineering, but on the bedrock of disciplined, people-centric management. Truly, a masterclass in the art of insurance dominance. Final summary. This is no mere investment manual, dear readers. It is a veritable roadmap to rational decision-making in the realms of business and life itself. At the very heart of this treasure trove of insights lies a set of principles that have guided the extraordinary journeys of these two investing legends. Invest in what you truly understand. Not the fleeting fads or convoluted financial models, but the solid, enduring businesses whose secrets you have laid bare. Only commit your hard-earned capital when the margin of safety is substantial, for as Buffett himself has said, it's not supposed to be easy. Anyone who finds it easy is stupid. And when it comes to deploying that capital, forget the short-term trading game. Focus instead on the art of great capital allocation, building a portfolio of businesses that will compound wealth over decades, not just quarters. For as these sages have shown, patience and discipline are the true keys to unassailable success. But the true genius of Buffett and Munger's approach lies not just in the numbers, but in their keen understanding of the human element. Culture and management, they remind us, matter just as much as the financial metrics. By surrounding themselves with people of the highest integrity, who think and act like true owners, they have created an enterprise that seems to defy the very laws of corporate gravity. So, as we bid farewell to this masterclass in investing and life, let us carry with us the timeless principles that have elevated Berkshire Hathaway to the pantheon of business greatness. Invest with clarity of purpose, deploy capital with unwavering discipline, and surround yourself with people of unimpeachable character. For in doing so, we too shall unlock the secrets to building lasting wealth and prosperity, not just for ourselves, but for generations to come. But the journey does not end here, my fellow travelers. What other literary gems await us, ripe for the plucking? Let us know in the comments below, and we shall embark on the next adventure, guided by the ever-steady hands of Buffett and Munger. Like, subscribe, and hit that bell. For the road ahead is paved with wisdom, and we shall not rest until we have absorbed every last drop.